What's up, guys? Brendan from Crypto Cauldron looking at BTC price action right now on the 1 hour. Pull up your 1 hour charts because we are battling the 200 moving average again. Again, like I said yesterday, all my previous videos were focusing on the 4 hour because the 1 hour had constantly been able to defeat it. But July 9th, we had 5 attempts. Look at the candles. 5 1 hour candles. Circled them here. Boom, we fall. Reject it 5 times by the 200 moving averages. Pinkish line going through here. Build back up. We have one more attempt. We get a shadow, a spike off the wick, all the way up to this red line, right? And boom, we fall. We have an exaggerated fall. Why? Because we formed a double top. Here's the eyebrows to the double top. And let me show you something. So people say, well, how do you know how far you're going to fall? Well, in charting and pattern completion, what you do is you grab a trend line, find your lowest point, find your neckline, right? That's 3 points of contact. So we have a neckline here, and then right where this candle would have been. And you can see the shadows, or the wicks, are called shadows in Japanese trading. So I take the shadow from the lowest point, find somewhat of a midline, because this is kind of sloppy. There's a lot of midlines in here, right? So I'm going to use the midline here. And then you bring this over to your neckline, which is, again, this red line where the candle broke it. This is your sell-off. See, there's your candle. There's your completion of the sell-off. Look how close that is. I mean, pattern completion. This is charting 101, guys. Doesn't mean you always get there, but this is how you can determine and predict falls, right? This is how I got to 22K Bitcoin. This is why my prediction is 20 to 25K Bitcoin from falling from a pennant. So it's very important in charting. Look at Thomas Bukowski's book on charting patterns. Look at Forex triangle trading strategies. I posted all that. And now let's get to current price action. Current price action, a little bit different what's going on. Well, stop. Okay. TradingView's fighting with me. You kind of had what looks like almost a double bottom, right? But it's a little bit, again, it's sloppy. Why is it sloppy? Because you usually want, price to hit the same area twice for a double bottom. So you have this little hook here, and this is your W, right? Like that. Then you have your price hike going up to challenge the 200. But see how much cleaner the double top is, because you have price literally at the same level here. It's a little bit ascending, but regardless, we went up, right? That's the important thing to take from that. The price went up to challenge the 200. So where are we at now? We tried the 200 once. We have all the EMA supporting us. We got rejected, good rejection, but because the clock turned over, the new candle formed above a line, and then we had some selling. So this is literally where we are right now. This is a critical point for Bitcoin. We've been over this ad nauseum, but guys, I think we're the only channel tracking the 200 as the market top, right? And again, previously, always on the 4 hour. This is the 1 hour, so this is different. This is just an increasing weakening of Bitcoin if we keep getting rejected here. So the bulls want to see this go up. The bulls want to see us break the 200, get up, and start legging up. But then we're going to have to deal with the 200 on a 4 hour, which has not been our friend since April 17th. And again, guys, this is all part of trading in a bear market. What are the parameters for a bear market? We went over this in the other video, but you have at least 2 months of 20% price decline, at least 2 consecutive months of 20% price decline. Refresh memories, April 17th, a couple days before we hit our BTC high, 65K. High for the bull run, 65K. April 17th, we dropped down to 47K. Okay? So that's more than a 20% price decline. April 17th, we climbed back up after we dipped down. We climbed back up to 57K, and then we drop into the pennant, the current trading situation where we are with the chop, right? So we're in the 40s. We go from 57K to the 40s. Now, again, this is off of 65K. Fast forward to today, we're at 33.9. Guys, that's almost a 50% decline in price in Bitcoin since April 17th, or off the high a couple days earlier. So we have met the parameters for a bear market. That is 3 months since April 17th almost. And if you just take from May 12th, that's 2 months tomorrow that we've been more than 20% decline. Now, don't let the term bear market freak you out. That's just a cycle. Okay, Bitcoin has changed a lot. The market structure has changed a lot. You have bear cycles, bull cycles. I understand in the crypto space, And a lot of people that trade crypto only trade crypto. They don't come from the traditional markets. In the crypto space, you have the bear cycle that goes on for years, and you have your bull cycle. Well, everything's changing, right? You got people now talking about a 10-year cycle. You got people talking about the bull run resuming and then going into next year. So there's a lot of different things. Don't let it freak you out. You can come out of a bear market and you enter a bull market. And again, the best way for that to happen, I think, is a corrective action. Price declines to a point where everybody buys in. And again, buy into premium projects, guys. Buy into companies. Look at your tokenomics. Companies that make money. Companies that if you get stuck with them at a great price, you're not going to be mad about it. Okay? Don't buy coins that aren't going to be around in a year. You got to understand tokenomics. There's a lot of research on it. We have a lot in our Discord group. If you guys want to check it out, come join. Ton of research there, a lot of smart guys, a lot of guys that are really in tokenomics. I'm into the TA side of it, but look at premium projects. This is crucial. What happens here, guys? What I think will end up happening is if we hold this rejection line based on the recent history, right? We're going to do something like this. We may come back down. We may come back up again and test it because we tested it twice here, and it may be a day or two apart. But even if we don't test it again, we're going to decline to below the cloud, which makes sense to me. Again, this makes sense to me because when you flip over to the 4-hour, right? Flip over the 4-hour chart, you have, let me clean this up real quick. You have all of these different resistance levels that we haven't even looked at because we're in the 1-hour, right? So when you're in the 1-hour, it's totally different. You're in a different time frame. And again, the 4-hour is historically where we've had the problems. This is where we've had the problems. Now you have a very thin cloud here. So this is good for a bullish scenario to have a thin resistance cloud. The problem you're facing is your 200 is up here. You got to come up, right? And to do that, you got to do that on the 1-hour first. But you have to come up and you got to be able to test this. And this 200 moving average is sitting almost at 35K. And again, it moves because it's a moving average, right? So price goes up, it goes up a little bit. Price declines, it comes down. You see the candle turning blue, signifying it's bearish at the moment. But so what probably will happen if we get rejected on the 1-hour, remember, you Ichi for red clouds, red Kumo clouds, you trade beneath them. This is a prediction into the future. Most indicators only predict the past. They use the past to predict the present, right? So the moving averages, for example, they use trading days. Ichi forecasts the future. So in Ichi's saying it thinks price will do this. This is what Ichi's saying, under the red Kumo cloud, which makes perfect sense if you think that we get rejected again on the 1-hour, right? Now, price can also do this. This isn't a rule. I mean, it can come up, test the 200, and then decline, right? Or it can come up, test the 200, and break free and start legging up. Based on recent action, and if you look at my previous videos, obviously, the 1-hour is a coin flip to me whether or not it holds. What's not a coin flip is the 4-hour because since April 17th, this has been the market top. So that's why we're watching the 1-hour because the 1-hour could be the new market top, and we won't know that until we see how BTC reacts in this situation. Again, this is a new situation for Bitcoin. Previously we only watched it on the 4-hour, and it had no problem, no struggle on the 1-hour. It only lost the 1-hour because the 4-hour pulled it back down to reality when it got rejected. So keep an eye on this, guys. If you're in futures, this is where you would be shorting or longing. If you're shorting here, again, because you have a rejection and I have a confirmation of a rejection. If you're longing here, you'd want to go the other way, right? You want to have the line break, a new candle form, retest it. Now this candle's still open, so if you want to be conservative, you'd wait until this candle closes and you have another candle confirming a downtrend from the top. Again, this is the 200 moving average. And as always, use stop losses, guys. One last thing. I get asked about my Shande all the time. Why do I put orange lines on it? I'm looking at momentum, guys. So this is a momentum indicator. It's an oscillator. It only does one thing, momentum. I use the setting of 5 trading day period. So I add, because basically the bigger you make this, the more range you have. This is overbought, kind of like a stochastic. This is overbought, this is underbought. But it's more interesting to me the actual range itself. Where is it overbought? I mark it, right? And look how accurate it is. I marked this 3 days ago, 2 days ago, and it's still hitting the points that I marked. So it's a momentum oscillator, so I can see where the market's at. So I can kind of determine a bottom. Here's your midline, and I can kind of determine a top, and I update it as needed if price action changes. That's it, guys. New video coming. I'll make a video for sure after we figure out what exactly is happening on the 1-hour. Based on recent history, like I said, my Cauldron prediction is going to be rejection. Okay, and again, this is very likely a new market top. If it holds, it is certainly a candidate for the new market top replacing the 4 hour because of the history of rejections you have now going back 2 days. So you want to see this multiple tries, 5 tries, one try dump. Now you have one try and a possible dump. This could reverse still, but that's a weakening of the attempts, right? Which again is confluence with a bearish market. Well, soon we'll reverse it, guys. We got to find a bottom. Keep your chins up, keep your tether locked and loaded. Have a great Sunday with your friends and family, and we'll talk soon.